Hello, welcome once again to my YouTube channel. We are going to continue with the lessons we have been having for the past days now. So today we are looking at market flows and how to trade them correctly. So the market doesn't move randomly; it moves in a clear flow. So knowing them helps you to position yourself at a very point at which you can be able to pick good trades. So the market is either moving to the upside, that is, it's being bullish, or it's moving to the downside, that is, it's being bearish, or the market is consolidating, ranging, or being choppy. So in today's session, we are going to take them one after the other, break them down, and then you will be able to understand how to trade them correctly. When to buy. So there are three flows here: bullish, bearish, or consolidating or ranging. So these are the three flows we have in the market. And knowing them helps you to position yourself when the market is bullish, where to be looking for opportunities to buy, and when the market is bearish, where to be positioning yourself as well to buy, and how to even trade a ranging market, consolidating or choppy market. Mind you, for the last part, that is ranging markets, choppy, and then consolidating, you can trade ranging correctly, but for that of consolidating and choppy, it is best you stay out of it as a beginner. So we are going to focus more on the bullish market and then that of the bearish market. Don't forget that we already know what constitutes a bullish market and that of a bearish market. So in a bullish market, we want to see series of higher highs and higher lows. And that of bearish market, we want to see series of lower lows and lower highs. So with these highs and lows, these are the very places we are going to position ourselves in the trend so that we will be able to pick good trades. Don't forget, we say the trend is always your friend. You have to make sure that you don't trade against the trend. And how do you make sure you don't trade against the trend? You have to be able to identify the trend first. When you're able to spot the trend at which the market is going at a particular time, then you'll be able to position yourself at a very good place and then also pick good trades. So when you understand these market flows, your entries become cleaner, better, and then as well, these flows can also help you to improve your patience because you are not going to do guesswork. You are going to be patient enough to wait for price to either come to a high or a low before you decide on what to do. Without wasting much time, let's get into the charts.
All right, welcome back to my screen. So today we are going to look at three major topics or three important topics. That is the market trend, okay, or the trend flows. So we have three trends in the market or three market flows in the market. We have bullish market or uptrend. We have the bearish market or downtrend. And then the next one is sideways or ranging markets or consolidation markets or choppy. All right, so these are the three forms of market directions that we have. And we are going to look at each of them very, very well. If you get to understand this market structures, it is very easy to trade a market because at each time in the market, you know what is happening. So for that of the bullish market, we want to see price going to the upside like this, forming series of higher highs and higher lows. This is what we want to see. This is what actually happens in the market. A real market scenario, it may give you something like this before it continues to the upside. All these are the same thing just like we are seeing over here. Just that when you switch to the lower time frame, this is what you will be seeing. Okay, this is the kind of formation you'll be seeing, but on the higher time frame, you'll be seeing it like this. So you have your higher high, higher low, and then it continues like that. So the moment you identify a higher high, a higher low, two series of higher high and higher low, it tells you that the market is bullish. Just like this. So you have a higher high, a higher low, higher high, a higher low. So this tells you that the market is bullish. And how do we trade when market is bullish like this? So when market is bullish, you only look for either the low or highs to buy from. When the market is bullish, we only buy, we don't sell. As a beginner, when the market is bullish, you don't sell. You only look for buying opportunity. And why do you look for the buying opportunities? You have to look for either the highs as price is retesting the highs as previous resistance, or when price come to the previous lows. Okay, that is also a support level. This is a resistance, this is a resistance, this is a support level. So you wait for price to come to the support level too as well, and then you buy. So you can buy from here or you can buy from here. So you only buy from the lows and then the highs, but not the higher highs. Don't sell. So when price gets to the higher high, you can pick a buy. When it comes to the higher low, you can also pick a buy. But then when it gets to the next resistance, like the next higher high like this, don't look for selling unless you remember what we did in our previous lesson. Unless there is a break of market structure, unless price breaks the last low. When price breaks this low, this particular low, after it has gotten to a major resistance level, then you can look for sales at the retest of the neckline and then you sell. All right, so the same thing applies to that of the selling market too. So let's quickly look at that of the sell market or the bearish market. For the bearish market, it's just the same market patterns that we are looking at in this time around the opposite. So the sell market, the market will be moving to the downside like this or downtrend. Okay, market will be creating series of lower highs, lower low, lower high, a lower low, lower high, a lower low, a lower high, a lower low. And you should in the real market or on the lower time frame to be giving something like this to create another high, lower high. So this is what it will be doing. Just that you should know that the next lower high should not break above this the previous high. The next lower high that will be forming because we are in a downtrend. The next lower high that will be forming should not break above the previous high. The moment it breaks above the previous high, then it's signifying to you that there is a potential buying strength or the buyers are gaining momentum. So always it should close below it and then close below the previous lower low. So a lower high, a lower low. Let me indicate it so you can see clearly. This is a lower high, a lower low, a lower low here, a lower low in that regards. The same thing applies to that of this pattern. And what should you do here and how do you take your trades from this level? So you should always wait for price to get to the resistance. So in these areas, you can easily spot out your turning point. Don't forget your turning point. So where are your turning points? Your turning points are the lows and then the highs, the lower highs and then the lower lows. So this is a resistance level. This is a support level. That price has been broken below, so it has become a resistance. So when price gets there, you can sell. The same thing applies to this particular low, which was a support level. Price has broken below. So when price gets there, you can sell. As well, if price breaks above in here and goes to the next high, you can also sell from there. You can also sell. That's also a resistance level, so you can sell. So this is where we sell. We pick our entries from the market trends. Okay. The only time you cannot pick a trade around these levels are when price has gotten to a major support level and then has broken above the neckline or the previous lower high. The moment price breaks above the previous lower high, which is this part, don't look for sales again. Now the market is changing direction, so you should be looking for buying opportunities. So you either wait for price to retest the neckline, this neckline here, and then you buy because this resistance has now become a support level since the break of structure from this particular point. Or if it comes down, if it breaks above the high, it's coming down again, you can consider this shoulder. You can consider this shoulder over here, this left shoulder, and then it gives you the right shoulder. Then you can buy from this point, putting your stop loss below it because the market can still continue to the downside. So that is how best you can trade this pattern. It applies to that of the buying market too as well. So now let's look at the next thing. The next one we are looking at is the sideways ranging market or consolidation or choppy market. This one does not give you a clear direction of the market. It tells you that the market is at equilibrium. Both buyers and sellers have the same strength. So the market consolidates like this, just moving sideways like that. So this is what the market will be doing. It comes with a lot of spikes, so it's very difficult to trade this kind of formation because it doesn't give the clear direction at which the market is going. It doesn't give the direction at which the market is going. So all you can do when you want to trade this, all you can do is to mark your support level. When price gets there, you buy, or mark your resistance level. When price gets there, you sell. Mind you, price can break above any of these levels, can break above it. When it breaks above it, you know what to do. Wait for a resist. When price breaks above it, you know what to do. You wait for a retest on that booking structure and then you buy to the upside. When it happens to the opposite, breaking to the downside, you wait for a retest. When price breaks to the downside, you wait for a retest and then you sell. Another best thing to do is to stay away when the market is consolidating like this. All you have to do is to mark your support and resistance level around these levels. And then when price breaks above it, then you can concentrate on the direction at which the market has broken and then you take a trade to that direction. Now, when market is doing this, it's gathering a lot of momentum. And when it breaks out, the momentum becomes very intense and very impulsive. So it's always best as a beginner, you trade within this range or you opt out. Now, let's get into the charts. Let's look at real market examples. All right. So let's look at this point. Over here, you can see that it's very okay. The market is bearish, forming series of lower high, lower low, lower high, lower low, lower high in that regards. Okay. So now let's look at more examples with clear picture. So okay, let's look at this particular point. Over here, you can see that the market was very, very choppy. This one is choppy and consolidating. In this type, it's in this type of market, it's very, very difficult to trade within it. So all you have to do is to mark your resistance and then you mark your support level. And then after you have marked your support level, you wait for price to break above or below. So let's see what happened. Price broke below it and it went to rate test it and then it dropped. So at the rate test, that is where you look for your entry and then you sell. Okay. And when selling, don't forget that you always put your stop loss above your trade to protect your capital. Good. So let's look for more example. So you can see at this point that the market was over here. We say it is ranging. Okay, this is a ranging market. When you mark the support, taking it from this side, this one looks a bit clearer than this one. This one, when price gets to resistance, it is clear. You can sell it. When it comes to support, you can buy. When it goes to resistance, you can sell. But this one, look at it over here. It was consolidating. This one we say okay, it is choppy. So this type of market, you stay away from it. Now let's look at this pattern too also. So this is a bearish market or a downtrend. So as the market was forming lower lows and lower highs, we see that when price gets, this is a lower high, this is a high, this is a low, forming a support, this is a lower high. When price came there, it sold. This is a lower high. Price went there and then it sold. But finally, price broke above this range. And then if you are using the trend line, you can as well mark this. And then you can see that there was a red test to the trend line and price went to the upside. So we have a bullish trend. This is a bullish trend. When the market is going to the upside like that, it's a bullish trend. And when it is coming down like this, it is a bearish trend. Okay. So these are the few things you need to know. You need to know when the market is consolidating and when the market is ranging. This one, you see it is going sideways. It's a bullish sideways. You can see that it's just going sideways. It is consolidating like that, not giving you any clear direction at which the market is going. So when you are able to mark this, all you should do is to mark this. Okay, this is not the correct one. So let me mark it this way. All right. So when you mark the resistance like this, and price broke above it. Okay. So you can see that price broke above the resistance. After price broke above it, it came down to retest. So this is your retest level. The price came to retest the broken level, the highs. Okay. And then it went to the upside. Don't forget that whenever price breaks any level, price will have to come and retest that same level. This resistance was broken, price came to retest it, and then it went to the upside in that formation. So what I'm doing is what we call back testing. You should be able to understand that the market is bearish, then the market is bullish. Okay. And that's why I'm doing all these things for you to know the differences. So now let's look at this part also. Over here, you can see that the market sold for a very long time. This one, we see the market is bearish, okay, or in a downtrend. So what do we see, or what do we see at this point? We see series of lower highs, lower lows, lower highs, lower lows in that regard. And price keep testing either the lows or the highs. So this was created, broke structure to the downside, created another low, and price went to retest that same resistance level. Price went to retest that resistance level, and then it went to the downside. The same thing happened at this point too. Price went to retest it, and then it went to the downside. Price kept on. The same thing happened. So this is also a low, and price went to test it, and then it sold. So that is that. So there's another level as well. There's a lower low. After price broke below it, price went to retest it, okay, multiple times before it sold. So that is market trend. The market is always trending to a certain direction. It's either it's selling, it is buying, or it is going on sideways. So you should be able to identify where the market is going, and then you know what to do. Now in the current form, you can see that the market is bullish. You see that we are forming series of higher highs, higher low, higher high, higher low, higher highs, higher low, higher high, higher low, higher highs, higher low, and then possibly we are expecting another higher high. So in this regards, you know that the market is bullish. So when the market is bullish, what do you look out for? You look out for either the lows or the highs, and then you only buy, and then you only buy from it, unless you want to scalp, okay? And then each time frame has a different story it says. Each time frame has a different story it says always. So you have to be mindful of this. Now, you would have to go into the chart and then identify bearish market for me and then an uptrend, a bullish market for me as your assignment. And then you make sure you send them to me in my DM. Always make sure you come to the right side of your screen, take a snapshot, copy the image, and then come and paste it in my DM or in the group. And then I will review it. Trade with clarity. You make sure make sure you trade with the concept I'm teaching you. It's a step by step thing we are doing. So you don't jump the steps. Make sure you follow all the steps, and then when you get to the final part, you'll be able to trade professionally. See you in the next class.